Sorry, everyone. No one comment for a second because Restream is having issues with the chat. 1 second. Sorry, everyone. There we go. Now the chat is working. So I can see everyone's comments only from BullXLP. BullXLP, good evening. Good to see how you're doing. Everyone else who commented, I can't see your comments. I can only see BullXLP's coming. Now I can see everyone's comments. Hello, Miles. How are you doing today? I'm doing great. Scott, good to see you, brother. How you doing? Good evening, Miles at CMF. Good to see you as well. Free and forever. How you doing? How you been? Jason, good to see you as well. How you doing? Evening. It's good to see everyone's here. JP, good to see you as well. How you doing, brother? How you been? Everyone else who commented beforehand, I'm so sorry. Commenters, good to see you as well. How you doing? Mike, good to see you as well. How you doing? Hello, Miles. Good to see you, bro. How you doing? T, good to see you as well. Hello, CMF. How you doing today? I'm doing great. Good to see you. Let's go. Pablo, good to see you as well. How you doing? How you been? Okay, let me the live show as well. Pin the live show. Pin to your profile. Pin. Hello, Miles. A CMF. Peg. Good to see you as well. How you doing, Peg? How you been? Okay. Let's do intro, disclaimer, and what we're going to go from tonight's live, and then we'll go straight to the first news. And obviously, my response essentially towards the end of the live regarding Vanik, in other words, Matthew, his moronic opinion on XRP, in other words. But before we go for any of that, welcome to the CMF live show. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. long time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And also we do Q&As on this live as well, which means if you do have any questions or comments, put it down inside the comment section. I'm more than happy to help you out. Thank you so much to everybody who has liked and retweeted this live show right off the bat. Thank you so much to everyone who's done that on essentially X, if you're just on X. And thank you so much to everyone on YouTube who's watching right now who's also liked the live as well. And a special thank you to everyone who's also put a comment outside the live, because it does really help with the algorithm. CMF members, if you haven't liked or retweeted, smash the like buttons and smash the retweet buttons, and let's get into this live. Before we get into the first news, which is regarding Bitcoin and the Nasdaq, let's go to the comment section first. Happy Friday, everyone. Let's go Peg. I dollar cost average XRP today. I love the opportunity to get more wealthy. Let's go Scott. Share the live. Let's go Scott. Evening, Miles and everyone. Joe, good to see you as well. How you doing? Let's go Scott. Good evening, Miles, the CMF family. Funky brother, good to see you as well. How you doing? Like, comment, and share the live. Thank you. Facts. Let's go Peg for saying that. How was your meeting this morning, Funky brother? It went actually very great. It was a very good meeting. Share the live. Let's go Scott. Today's meeting was regarding the construction side of CMF. On Sunday, I might be leaving to go to Germany. It's not confirmed, but I might be going to Germany, coming back essentially on Wednesday. That's on the side of essentially the car side of the coin move. Hi, Miles and CMF family. Hope you're doing good today, boss. Hope everything went okay. Went brilliant. Carlos, good to see you. How you doing? I hope everyone had a good day. Let's go, Scott. Now, first news on tonight's live show is regarding Bitcoin and the Nasdaq. Bitcoin has, favorably known as the digital gold if you ask people like Michael Saylor, but unfortunately Bitcoin tends to tiptoe and dabble on the Nasdaq side instead of following gold's price actions. So here it is. Bitcoin and the Nasdaq correlation is bad for Bitcoin's price, is what's coming out now. For years, the Bitcoin news, Bitcoin has been championed as the hedge against everything, which is true. People like Michael Saylor will, die on the sword for that, regarding Bitcoin as a hedge against everything there is out there. And that's essentially, Alice, the mainstream financial system, from inflation to political unrest to wars to anything that could possibly go wrong in this world. Bitcoin has always been the golden goose, or has it? Or is it just an idea? Yet, as 2025 unfolds, the hard numbers keep telling a different story. The Bitcoin price is still very much tethered to the moods and the mayhem of Wall Street and the Nasdaq in particular, and wars and inflation scenarios and everything else that comes with it. And this time around, the relationship is more toxic than ever. It's skewed against Bitcoin holders in ways both subtle and severe. On paper, Bitcoin is meant to be the outsider, immune to essentially central banks and the flow of tech earning seasons and the Nasdaq and the stock market in general. In practice, the data makes plain that essentially, Bitcoin price and broader crypto markets remain intertwined with equities, especially tech-heavy Nasdaq. As essentially Wintermute points out, throughout this year, the correlation between the two assets has remained stubbornly high. This latest Bitcoin news has caught the eyes of traders right now. It has revealed a dynamic that is increasingly difficult to ignore for investors positioning themselves as uncorrelated crypto believers. This might not have caused much concentration in the crypto markets in bull cycles in the past, when Bitcoin's price and the Nasdaq moved in sync. But in 2025, market regime, the picture is far less flattering for Bitcoin. According to Wintermute, the Bitcoin price now reacts far more strongly to the pain, essentially, than to the optimisms. When the Nasdaq tanks, Bitcoin's price falls harder. But when tech stocks rally, Bitcoin gains a modest, or essentially by comparison to the tech stocks. In other words, there is a structural performance skew at play. The Bitcoin price is essentially punished more for equity weakness and unrewarded for equity strength. This essentially emerging dynamic is not without its precedent, and that's essentially a part of what worries seasoned essentially market watchers. The performance between falling harder on down days but lagging up on the good days was last seen back in 2022 in the bear markets. The telling detail, the kind of essentially usually signals exhaustion inside the market space, not essentially for a peak in a sort of a way. In the 2022 cycle, it was essentially a harboring of further downsides, not a sign of imminent crypto market recoveries. Zooming into 2025, the version of this essentially skewed coloration suggests not euphoria, despite continued essentially resilience in the spot Bitcoin price. The fact that Bitcoin dances more to the tune of the Nasdaq and essentially declines than Nasdaq rallies is telling. Bitcoin's ability to hold up despite this pontiff setup becomes almost to its own vote of confidence. Yet the broader context paints a more anxious picture. There is a precedent risk essentially of sentiment and a macro essentially uncertainty dodging every attempted rally. This matters not just for traders chasing the next move, but the bigger story of what Bitcoin is supposed to represent. The asset's long-tutored role as the digital gold. It seems like I wasn't the only one that kept on, sometimes coming out and saying, we're tired. The entire crypto space is tired of following Bitcoin's treacherous footsteps of the digital gold that has been titled, but yet it doesn't move like gold does. It follows tech stocks. When wars happen, Bitcoin is the first thing to drop, even though it's supposed to be immune to everything. Anything that essentially happens in this world, the asset that's supposed to be immune is the one that reacts the hardest. And the rest of the crypto space is stuck behind it. Wherever it goes, Bitcoin goes right, we go right. Bitcoin goes left, we go left. Why? Because we don't have rest, because we don't have a clarity yet, because we don't have utility. Investors looking for a safe haven are forced to reckon with the possibility that for now, at least the Bitcoin price is caught in the cycle and cannot willfully essentially escape. Why does essentially this persist? Much of it boils down to the psychological feedback loop that drives markets in times of stress. When the Nasdaq suffers a rout, the risk of mood tends to spread quickly. Bitcoin, which has increasingly attracted institutional investors trained in the language of asset allocation and essentially portfolio rebalancing, is no longer perceived as the radical outlier. It's another line item essentially to cut when the cash is king. Meanwhile, the hope that Bitcoin's price and crypto markets will leap ahead on Nasdaq green days has not been realized with the same essentially sentiments. That likely reflects a more cautious environment essentially of cash over high beta exposure. For all the talk of decoupling and hardening essential narratives, this toxic correlation leaves Bitcoin's foundational story exposed. It hasn't just about day-to-day Bitcoin's price swings, but about the bedrock of Bitcoin's identity. Can it ever escape its newly cemented role as a risk asset rather than a risk-off asset? Or is it fated to twist in the winds of broader equity trends for the foreseeable future? If there is hope for Bitcoin essentially maxis, it's an historical observation that these periods of essentially of correlation often occur near crypto market bottoms, which is true and not the tops. This may be a cold comfort for Bitcoin's price. It suggests that the pain is a necessary procedure to eventually essentially for recovery. But for now, the facts remain: Bitcoin behaves less of a safe haven and more like a high beta Nasdaq tracker on the way down and logged essentially on the way up. The harsh truth is impossible to ignore. Bitcoin's toxic relationship with the Nasdaq is for now a feature, not a bug of this cycle. Honestly, everybody, and I can talk for everybody regarding this matter, because I think everybody will stand with me on this. Everybody is tired of Bitcoin's treacherous footsteps inside the crypto space, following the Nasdaq when it shouldn't be, getting affected by geopolitical tensions when it shouldn't be, getting affected by macroeconomic events when it shouldn't be. All these things are supposed to be, Bitcoin's supposed to be the safe haven, the digital gold, and, Bitcoin maxis will still praise it on that. But the reality of it is, it doesn't react like it, to be honest. And now this is why I say I speak for everyone that we need Clarity Act. We need a Clarity Act. We need to go into utility and we need to decouple from Bitcoin. XRP, Solana, XLM, HBAR, AVAX, the list goes on. We all need to decouple from Bitcoin. The faster we get regulations, the faster we can see the true potential of the crypto space. On that note of Bitcoin, essentially treacherous footsteps inside the crypto space, dragging the entire market down with it because tech stocks aren't doing too good, because Michael Burry suggested that we might be entering into an AI bubble scenario type of situation, which made SoftBank withdraw essentially their investment of $5.8 billion, which is yesterday essentially. And this is on the basis of, AI is about to burst, tech stocks are going down, Bitcoin's following the Nasdaq, unfortunately, the rest of the crypto space is following his footsteps. We still don't have a Clarity Act. And on the topic of essentially Michael Saylor and the Bitcoin maxis, Michael Saylor, MicroStrategy, $4 billion Bitcoin shuffle custodian switch sparks a feud inside the market space. So while the markets are going essentially, downwards or sidewards, Michael Saylor news. $4 billion worth of Bitcoin started moving around in wallets, which added more speculation that is he about to sell. In a crypto market already reeling from Bitcoin's abrupt plunge below essentially $100,000 in trading, at around $97,162, as of November 15, 2025, eyes turned to corporate Titan Strategy, X essentially, MicroStrategy, or today known as Strategy. The firm today moved 43,415 Bitcoin, valued at $4.26 billion, across over 100 distant addresses. The activity, flagged by a blockchain analytics firm, essentially Arkham Intelligence, initially triggered whispers of fire sale, which added to the feud of Bitcoin, which made it actually drop 2.5% even more today. But fear not, holders. Arkham's deep dive debunks essentially the panic scenario. A lot of people misread the situation that MicroStrategy might actually be selling essentially their Bitcoins, but it seems like they're only moving their asses about for the time being. These transfers are mere housekeeping in an ongoing custodian migration. Over the past 2 weeks, Strategy has essentially shifted assets from its long-standing Coinbase custody setup to a new unnamed custodian. Today's batch, a seamless essentially continuation, outbound transfers, the fresh custodian, internal essential relocations within the new setup, and routine Coinbase wallet refreshers to maintain operational hygiene. This does not mean that Strategy sold their Bitcoin, Arkham emphasized in their updates, noting essentially no outflows to exchanges or cold storage dumps have been found. Strategy's Bitcoin playbook is no secret. Executive Chairman Michael Saylor, the unyielding Bitcoin essentially maxi, has long championed aggressive accumulation for Bitcoin, no matter what the price is. As of essentially early November, the company's war chest boosts around 641,000 plus Bitcoins, acquired at an average price of $74,000, now worth over $62 billion at current prices. That's about 3% of Bitcoin's total supply, dwarfing essentially rivals and underscoring Saylor's Bitcoin standard for corporate treasuries. Recent filings also show that fresh buys like 397 Bitcoins on November 3rd for $45.6 million, even as markets wobble. Yesterday, Saylor fired back at the holdings dropping rumors, and a lot of people thought that he might be actually shifting over his Bitcoins. But for the time being, it seems like you're just moving them wallet to wallet. Bad timing, I would have to say on that. This isn't strategy's first wallet waltz. Regular rotations ensure security and compliance, often followed by Arkham Intelligence relabeling of address essentially for transparency. Monitoring the entity's flows over the forfeit essentially reveals a pattern, no net loss, just optimized storage. In a sea of retail essentially FUD, this episode spotlight institutional fortified. While ETFs essentially inflows cooled last week and the fear of greed index essentially catered to 15 extreme fear right now, whales-like strategy signal essentially conviction. Analysts eye a rebound essentially to 114,500 bitcoins by the end of the month if macro wind shifts per essentially coin essentially DCX's forecast. And strategies essentially moves affirms Bitcoin's maturation as a treasury asset, even as the price tests $97,000 lows. As Saylor essentially quips, it's not about timing the market, it's about the time in it. With BTC's halving scars fading, essentially, and Trump era regs essentially looming, the custodian pivot could proceed to essentially a bolder buy. So, today, Bitcoin follows the Nasdaq. Tech stocks going down because there might be an AI bubble burst. Is what's going around essentially in the stock markets, the rumors that are going around. And Bitcoin, unfortunately, is following tech stocks. So Bitcoin dumps, everybody dumps. There's regulation. There's no regulations whatsoever. Michael Saylor, regarding him, is he moving assets? Is he moving Bitcoin around, or is he dumping on the market space because he's desperate to cash? It seems like he's only moving assets around. He's not dumping any sort of a way. But I do believe somewhere down the line he is going to be dumping. Not now, but somewhere down the line. Now, moving on essentially from that to Eric Trump. But before we talk about Eric Trump, let's go inside the comment section first. This was happening there. And go straight into the Eric Trump news. Once again, thank you so much to everybody who has liked and retweeted this live show. Honestly, thank you so much to everyone. Let's see where we're at. We were here, I think. Does that mean no live show next week? Possibly, yes. So I might be doing a German trip. So I might be going to Germany on Sunday, this Sunday, coming back on Wednesday or Thursday. But I'll keep everybody updated. And this is relevant to essentially it's a work trip. And its relevance is to CoinMove's essentially chauffeuring and self-chauffeuring, essentially car services that CoinMove is going to be offering. The meeting that I had today was regarding construction part of CoinMove. But yes, I might be going to Germany essentially. I might be going to Germany and probably Germany. Just Germany, if I'm not mistaken. Let's see. I'll definitely keep everyone updated in the CMF. Good evening, Miles. How are you doing? I'm doing great, Callie. Good to see you. How you doing? Good evening, Miles. Hope you're well, mate. And hi to all the CMF. Let's go, Addy. How you doing? Greetings, Miles, the CMF. Happy Friday. Let's go, Ray. How you doing? Miles not sold me anything. He has provided me with so much knowledge to allow me to get info in the position that I'm in now to benefit from the international bet. Let's go. Win-win situation for me. Let's go, Scott. Good evening, Miles and the CMF. Manny. Good to see you. How you doing? The best crypto group online daily, bar none. Notice I said daily. Let's go, Scott. Hi, brother. Come on. Good to see you. How you doing? Facts. Let's go, Dazzle. Hello, Commander. Miles, a lot of big institutions are betting on Bitcoin going down to 75K. This means that altcoins will also drop too. Yes, because we don't have a Clarity Act. Evening. Good to see you, mate. How you doing, Pure? You sure do, brother. Greetings, Miles, CMF. Lena, good to see you. How you doing? Frustration is a very mild word for how we all feel. Morning, Miles of CMF. Shelly, good to see you. How you doing? How you been? Happy Pisces, good to see you. How you doing? I want to believe that XRP will be the market standard going forward. I believe so as well. Hello, Miles and family. Susie, good to see you. How you doing? What do you think about HOT? I still think it's a good project. Has a future somewhat ahead of itself. Miles, you told me I could invest way back. I just want to keep you reminded. Let's go, Scott. We're going to CoinMove. Let's go. Now, volatility is your friend, is what Eric Trump said. Eric Trump is not bothered by Bitcoin going down or the crypto markets going down because it does create a buying opportunity for people who have money, and for people that don't have money, that's okay. You know, sometimes the timing might not be good for you, but you still have your assets to reflect on. For the people that have money, it's always a better option to dollar cost average into scenarios like this. It creates a buying opportunity. None of this is financial advice, just sharing you news from Eric Trump. Eric Trump, the son essentially of US President Donald Trump and co-founder of American Bitcoin, is undeteriorated by the recent downturns in the cryptocurrency markets, saying that volatility is the cost of achieving outsized returns, which is facts. I think volatility is your friend, Trump essentially told Wall Street Journal in an interview, as Bitcoin briefly fell below 95,000 and stood about 25% lower than its early October peak. The turbulence has been worse in that essentially altcoin segments, with major assets down from 5% to 11%. Part of the weakness that began with October 10th market crash, which wiped out some $19 billion in leveraged positions. Overall, the crypto market has shed more than $1 trillion in combined market capitalization from its peak. Trump has reportedly emphasized increasing the company's Bitcoin reserves, prioritizing metrics such as the Bitcoin per share ratio, which he argues will ultimately strengthen shareholder value. Now, this is coming from Eric Trump. The move essentially comes aimed at Donald Trump's administration push for broader crypto adoption, highlighting by the January executive order on digital assets and the creation of the Federal Working Group on crypto markets and the passage of a key stablecoin legislation and soon to have a Clarity Act. However, for Eric Trump, this is simply part of the investing landscape for crypto. Anybody who can't embrace volatility in cryptocurrencies should probably get out of it, he said. It's actually a great opportunity for us to buy, which I agree with 100%. Trump is at least putting his philosophy, Eric Trump is at least putting his philosophy into practice. American Bitcoin, the mining company he leads, which went public early this year through a reserve merger with essentially a guy from Digital Mining, added more than 3,000 Bitcoins in the third quarter, bringing his total holdings to over 4,000. So he is putting his money where his mouth is regarding Eric Trump. And Eric Trump's essentially saying these words of, this creates a buying opportunity, correct? It does. And these are the last times of these buying opportunity scenarios you'll be having, because once we get a Clarity Act, it's not straight away, but once we get a Clarity Act, as I outlined the two outcomes of what will happen after the Clarity Act, it won't be straight away. But once we get a Clarity Act, we'll slowly start seeing that shift happening inside the market, slowly start seeing that shift that's going to be happening inside the market space regarding shifting over to clarity from speculative footsteps and buy, sell, trades that the crypto space has right now. But I agree with 100%. Times like this, essentially volatility creates buying opportunities, and also regarding the matters of him essentially saying that he told the Wall Street Journal in an interview that regarding I think volatility is our friend, and that anybody who can't embrace volatility in cryptocurrency should be getting out, he said. 100. Now, moving on from Eric Trump. Now, I would base that on essentially the crypto space in general, not just Bitcoin's footsteps. Now, the US Senate is what we're going to talk about next on tonight's live. The US Senate essentially proposes CFTC as a crypto regulator, which is exactly what we want. The US Senate Agriculture Committee, led essentially by Senator Bozeman, essentially, and Booker, released essentially that the discussion that they had is that the CFTC is going to be the leader in this whole essential crypto regulation policies going forward. This regulatory shift aims to curb the SEC's approach, potentially enhancing institutional participation in cryptocurrencies and providing clarity for crypto assets. The Agriculture Committee essentially adopted as a discussion draft proposing the Commodities Essentially Future Trading Commission CFTC, the PDF document that everybody saw and I essentially shared on this live show about a few nights ago. Regarding that, there's been discussions that they are actually going to go forward on that, regarding the CFTC being the lead. Senators John essentially Bozeman and Cory Booker spearheaded this effort, aiming to create a robust consumer protection while fostering innovation. This move intends to essentially realign crypto regulatory oversight, focusing on following market growth without hindering essentially emerging technologies. Exchanges handling digital commodities must register with the CFTC, signaling stricter compliance, but that could also be good because there'll be no more gray areas. This regulatory clarity is anticipated to boost institutional participation if the bill is passed, which it should be. Financially, the bill introduces a new funding stream for the CFTC, enabling establishments of dedicated spot market essentially regulatory regimes. This is expected to enhance staffing and resources and significantly impacting US-based platforms handling digital essentially commodities like BTC and ETH. No major also on-chain data shifts have been noticed since the proposal. However, stakeholders and public essentially are likely anticipating further legislative progresses and also before the significant market response. This regulatory clarity could potentially spur institutional confidence for mainstream crypto assets. The baptism essentially draft creates a robust consumer protections and spot digital commodity markets and creates a pathway for market innovation without stifling emerging technologies, said John, the Senate Agriculture Committee, the chairman of the Senate Agriculture Committee. The RMT, essentially historical trends, indicate that similar legislative acts like the House Clarity Act, aimed at essentially aligning the SEC and CFTC's jurisdictions, have been a pivotal moment in reducing regulatory conflicts between these two agencies, which I agree with 100%. But it does seem that they are standing firm on the idea that the CFTC should be the leading role, which nobody's going to disagree with that in this sort of way. After the shambolic movements where the SEC with Gary Gensler, even though they got rid of Gary Gensler, he's no longer obviously chairman of the SEC, it's still going good. Now, ARK Invest is what we're going to talk about next. Moving on from that to ARK Invest. ARK Invest acquires Circle shares, and there's a rumor going around that ARK Invest might be thinking about introducing a token. Reports claim that ARK Invest, led by Cathie Woods, invested $30 million in shares, in Circle shares essentially, and possibly linked to essentially ARC token launch. Through primary sources, essentially, there's no confirmation whatsoever. It's just a rumor that's going on right now in Wall Street, essentially, that ARK Invest might be thinking about launching a new token. The alleged investment, if confirmed, could signal significant market shifts, yet current data and official announcements provide no foundation for such a speculation. Reports have emerged suggesting that ARK Invest has potentially acquired Circle Internet Group shares aimed at an unverified rumor involving a new ARC token. No official statements have been collaborated essentially to back these claims up so far yet. ARK Invest, led by Cathie Woods, is rumored to be involved in purchasing at $30 million, and the reported essentially acquisition by ARK has not affected the monetary or crypto sectors, with no notable shifts detected whatsoever. Market analysts also remain unconvinced due to the lack of tangible also evidence about the ARK essentially token to exact investment values. There are no financial disruptions across Circle usual business operations, nor any implications for blockchain assets like E4 Bitcoin. Both Circle and ARK essentially official channels remain silent on the speculative developments, and no verified data is available to indicate significant financial shifts, and this rumor might essentially have caused. Market participants are still waiting essentially for official clarifications to assess essentially is this rumor going to be true. But I just wanted to share that with you just in case that rumor from Wall Street does become true, and that ARK Invest might be actually thinking about introducing a ARK token. Now, the Bank of England is what we're going to talk about next. Moving on from ARK Invest and Circle shares and ARK token of a possibility to the Bank of England. Before we talk about the Bank of England, let's go to the comment section first. Let's see what's going on there, and then we go straight into the next news. Hi, Miles and CMF. Stormy, good to see you. Well, how you doing? How you been? Miles, an exchange from BTC to XRP, that will still cause a tax ticket? Yes. If you make any transfers to any asset, convert any assets, it's still taxable, essentially thing. A lot of people think it's not. It is taxable. And even the Miles and crypto peeps getting taken into the cleaners today on my crypto. Let's go, Sample. How you doing? The Clarity Act needs passing like yesterday. What keeps holding up? Okay, no, we were here. I think I missed quite a few people. Let's see where we're at. Okay, we're here. Susie, good to see you. How you doing? We're here. When do you think the Clarity Act will get passed? It should have been passed a long time ago before government shutdown. Unfortunately, we had a government shutdown, which might have worked out in our favor because of discussions with the Republicans, essentially the Democrats, the House, Senate, and the White House and Trump's administration regarding crypto policies and into the Clarity Act. So that actually might have worked out in our favor. It's been estimated this month, by the end of this month, we should get a Clarity Act, or by essentially next month, we should be seeing the Clarity Act. Clarity Act in general is this year. The Clarity Act needs passing like yesterday. While it keeps on holding up things, I agree 100%. Share the live. Let's go. Stormy, good to see you as well. How you doing? Miles and exchange. Okay, we're here. Even Miles and Super Peeps. Simple, good to see you. How you doing? Greetings, Miles and family. Ian, good to see you as well. How you doing? Miles, does this mean that the bull run might actually start next year if the Clarity Act doesn't get passed this year? No. It can also start this year as well. And we're just in a manipulated market space. We're not in a bear market. We're just in a very, very highly manipulated market space. It's incredibly manipulated right now. Now, the Bank of England. The Bank of England eases but holds firm on stablecoin rules. So as I read out essentially a few nights ago on this live show, the Bank of England Andrew Bailey decided to introduce something quite moronic, which was putting limits essentially on stablecoins that the British holders can hold in terms of their wallets, in terms of digital British dollars. And it was the most moronic rules any country has ever suggested of introducing inside the crypto sector. So the Bank of England has published today its updated proposal for regulating stablecoins, a move closely watched by both crypto firms and traditional financial institutions, because as you all know, the City of London is the capital of money, Washington, D.C. is the capital of politics, and the Vatican is the capital of religion. So here it is. While the central banks appears to have softened their certain earlier positions, industry players argue the overall approach remains too restrictive for innovation to essentially thrive inside the United Kingdom, which is true. If you're telling companies they can only hold $10 million worth of British pounds in digital stablecoins, that's dumb. The proposal outlines how stablecoins, particularly those pegged to the British pound, should be issued, backed, and monitored within the UK financial system, which is fairly understandable. That part is okay. The Bank of England maintains that regulatory oversight is essential to ensure consumer protection, financial stability, and trust in digital payments. Again, I agree 100% it should be happening in that way. And some companies won't obviously be able to launch in the UK, i.e. Tether. Compared to previous discussions, the Bank of England has eased up some of its essentially more rigid requirements. For example, initial proposals hinted at daily redemption rights and 100% reserve requirements that some essentially viewed as unworkable. The updated version shows some flexibility around these demands, possibly in response to public consultation feedbacks. However, many inside the crypto and fintech space feel the regulations still lean heavily towards traditional financial models. It almost seems like the UK doesn't want to let go of its banking infrastructure and doesn't want to update it into this, essentially into the new world of digital technology, the new world of blockchain, in other words. The emphasis on centralized oversight and tight control over wallet providers and issuers could stifle competition, they argue, which is true. If other countries around the world are not as strict as essentially the UK, and they let people have their own wallets, their own privacy, essentially, and then there's the central side of the crypto space, because the rest of the world has the central side of crypto space and the decentralized side of the crypto space. And that's just how the world is going to be operating. Elements of centralization will always exist. But the idea of only centralization going forward is where the UK essentially starts tiptoeing downwards. Because then it isn't seen as a place that anybody wants to invest in. Already the British, essentially, the UK is losing, you could say, you know, on a daily basis, or a monthly basis, or weekly basis, millionaires and billionaires are leaving the United Kingdom because of unfavorable tax essentially scenarios. And the idea of the UK thinking about getting investments inside the blockchain sector now by pulling these stupid moronic moves is just going to make it worse for the UK. We're falling behind. Hong Kong is doing better than us in terms of crypto regulations. So is Singapore. So is Japan. So is South Korea. So is essentially the US. So is Canada, for crying out loud. Canada only has one law. Australia is doing better than us as well. And they follow our footsteps. So I don't know what the UK is thinking to themselves when they're favoring the banks by staying on the old traditional system when the rest of the world is getting updated. Moving on from the Bank of England's stupid footsteps inside the digital world, still to Alibaba and JP Morgan. Alibaba, massive behemoth Chinese company, has just essentially partnered with JP Morgan for tokenized payment systems. This is quite big, very big. Alibaba, in collaboration with JP Morgan, announced plans to initiate a tokenized deposit payment system for cross-border transactions, focusing on USD and euros settlements in global e-commerce platforms. This move responds to Chinese regulatory pressures against essentially private stablecoins. As you can tell, China is still standing very firm on the idea of no essentially crypto trading, no crypto investments, and no stablecoin investments. And the only reason that China started hating stablecoins even more is when essentially the advisor to Putin one day came out and said, about a week or 2 weeks ago, came out and said that America might be trying to use stablecoins to clean out its debt. The next day, Chinese authorities tell Hong Kong that they're not happy with any Chinese companies going towards stablecoins, just because the hint of the US might be using stablecoins to clean their debts. That essentially puts the US back onto number one. Even though it's still on number one, it will cement its place even further, which China hates. China wants to become number one. But you can tell by this that Chinese companies are not standing with the Chinese authorities or Chinese government, because they're partnering with JP Morgan. Alibaba partnering with JP Morgan is a big step for a Chinese firm, especially if essentially the partnership is all about stablecoins. Alibaba, alongside JP Morgan, is launching a system using regulated deposit tokens for global e-commerce transactions. This essential initiative stems from regulatory pressures in China against private stablecoins. The platform initially supports USD and Euro settlements using JP Morgan's Kinix technology for efficiency. Both entities aim to improve transaction speed and compliance. The project, essentially employing a regulated digital token model, may influence both banking industries and stablecoin markets. An emphasis on compliance could alter regional financial landscapes. The company will leverage JP Morgan's existing tokenization technology to streamline cross-border transactions for businesses using platform, said essentially the president of Alibaba. Alibaba's switch to AI-driven subscription models signifies a streak essentially shift in its business, distancing essentially from traditional transaction-based revenues. This aligns essentially with global digital transformation trends, and bank-issued digital tokens echo prior blockchain endeavors like JP Morgan Coin, enhancing institutional-grade transaction efficiency. Tokenization mainstream adoption could redefine financial norms. And past stablecoin projections in Asia essentially face regulatory challenges. For deposit tokens, Alibaba and JP Morgan set essentially a compliant precedent, potentially influencing the future of this sector in terms of innovation. The Financial Times highlights the real regulatory concern is who is the ultimate right of the coin age in the central bank or any private companies on the market. With Alibaba doing this with JP Morgan, it's going to make other Chinese think essentially to themselves that they could do the same thing. And that they don't have to sit on the sidelines waiting for the Chinese authorities, the Chinese government, or the politicians to give them a green light. Because if Alibaba stepped up and partnered with JP Morgan to get into stablecoins, which is something that China hates, after that news of Anton essentially coming out and telling Putin as his advisor that the US might be using stablecoins to wipe out their debts, and China hated stablecoins from that day on. Alibaba doing this, taking this first footsteps, is massive, and we could possibly see other Chinese firms coming forward and just going, we don't care what our politician says, we're going to be forwards, which means liquidity. Now, crucial interest rate cut essentially demand. A Fed governor's essentially bold move signals major policy shifts. So moving on essentially from Alibaba and JP Morgan partnering together inside the blockchain sector to the Federal Reserve. The Federal Reserve Governor, Stephen Miran, has made waves inside the financial circles by retreating his strong call for an interest rate cut, a move that could significantly impact markets from traditional stocks to emerging cryptocurrencies because he is a Fed governor. Essentially, as a close associate of former President Donald Trump, Miran's stance carries substantial weight in monetary policy discussions. Governor Miran's position comes at a critical juncture for the economy. He argues that current economic data clearly supports lowering rates. Moreover, his emphasis on dovish rather than essentially hawkish policy suggests a fundamental shift in his approach. This potential interest rate cut could affect everything from mortgage rates to cryptocurrency valuations. When the Fed essentially adopts a dovish stance, it typically means they prioritize economic growth over inflation concerns. This approach also often leads to lowering essentially borrowing costs and increased liquidity in financial markets. For cryptocurrency investors, a potential interest rate cut could signal several essentially important developments. Lower interest rates generally makes a riskier asset more attractive. Therefore, we might see increased capital flowing into cryptocurrencies as investors seek higher essentially returns. This dynamic creates an opportunity, but also requires careful risk management. Implementing a essentially interest rate cut involves balancing multiple economic factors. The Federal Reserve must consider both domestic conditions and international implications. Governor Miran's essentially advocacy for lower rates comes in ongoing debates about the appropriate timing and the scale of monetary easing. Current challenges also include managing inflation expectations while supporting economic growth. And additionally, the Fed must consider how their decisions affect global financial stability and emerging market spaces. Given that Governor Miran's push for interest rate cuts, and cryptocurrency investors should monitor several key indicators and pay close essentially attention to Federal Reserve's meeting minutes and economic data releases, the Federal Reserve's Governor, Stephen Miran, renowned call for an interest rate and cut represents a significant development in the monetary policy discussions. His dovish stance could signal important changes ahead for both traditional and cryptocurrency markets. As investors, staying informed about these macroeconomic shifts becomes crucial for essentially making sound investment decisions in an evolving financial landscape. So, a governor, Fed governor, coming out saying we should be seeing a lot more rate cuts going forward. We have to be lowering these interest rates. It means that they're favoring the idea of innovation rather than the idea of increased scenarios of essentially rates, which means it's going to play out well for us, the faster we get to utility especially. Now, moving on from the Fed governor's speech that we should be seeing more rate cuts to Binance. Binance has also done something quite big. Binance adds BlackRock Build as an off-exchange collateral for institutional traders. It's a big footstep for Binance. It's a big footstep for BlackRock, you could say. It's not a partnership, but it's just what Binance has chosen to do. Binance has begun accepting BlackRock's essentially USD institutional digital liquidity fund Build as off-exchange collateral, giving institutions a way to trade on the exchange while keeping their assets with custodians. The integration combines BlackRock's on-chain money market fund with Binance's custody systems, enabling traders to earn yield on Build while using it to support trading positions on the exchange. Imagine borrowing against your BlackRock Build essentially on Binance. A new Build asset class will also launch on BNB chain, expecting the tokens reach beyond Ethereum and opening it to a wider set of on-chain applications, according to a blog post by Binance today. With the additional Build, Binance supports multiple yield-bearing tokenized assets, including Circle's USYC and Open Edens. Build is BlackRock's first on-chain liquidity fund, a tokenized interest-bearing USD vehicle essentially issued through securities, and BlackRock's the world largest essentially asset manager, as everybody knows, $13.4 trillion in assets as of Q3 2025. As tokenized money market funds shift from simple yield products to mainstream trading collateral, Binance joins the growing group of exchanges allowing qualified clients to post treasury-backed tokens to back their positions. In July, Dobit and Crypto.com began accepting Build as a collateral, giving institutional traders a low volatility yield-bearing asset they can use in place of cash or stablecoins. In September, Bybit followed the support with essentially OCDT, essentially Dubai Financial Services Authority. And the trend echoes traditional essentially finance, where companies often essentially pledge treasuries and market money fund essentially as collateral through bank-run essentially systems rather than keeping assets on trading essentially venues. Tokenized US treasuries have become the second largest real-world assets beyond stablecoins, with the current market cap of $8.57 billion, according to realworldassets.xyz. So that is quite a big footstep, essentially, that they have taken regarding Binance using, essentially, BlackRock's Build fund as collateral. For anybody that wants to do it, offering this yield service on their Build, and also Build going on BNB chain is actually going to boost Build, in my opinion. Because, ETH compared to BNB, in my point of view, is, more widely used, especially inside the Asian market space, than ETH is. So we might be seeing some Asian, essentially, a lot of Asian, essentially, businesses, entrepreneurs, or high-profile investors entering through that. Build was actually going to get liquidity from BNB, in my point of view. Now, moving on from Binance, essentially, and JP Morgan to an interesting tweet by a moron. And the moron is VanEck's executive. Before we talk about that, let's go inside the comment section first. Let's see what's happening there. Are you glad that you held onto your XRP? 1 billion% yes. Most traders keep getting liquidated. Are we the liquidity as we have been holding crypto for the longest time? Yes, we are the liquidity right now. Hello, Miles of CMF. Ghost Bunny, good to see you. How you doing? How you been? Okay, we were here. Ian, good to see you. How you doing? Miles, does this mean that? Okay, not we were here. Miles, where's the liquidity will come from? We are the liquidity, not the one. So whoever is inside the market holding is is the floor, the foundation. We are technically the foundation of anybody else that's holding any other assets. It could be institutions, it could be high-profile investors, retail section, and so on. Okay, we're here, 100%. Hello, correspondent, good to see you. How you doing? Are you glad that you held your XRP? 1 billion% yes. What's your opinion on the following bag? XRP Hot, Dodge, Shiba, XLM, XDCH? Well, brilliant. Now, excellent. Vanik executive. He has slowly become, Matthew, in other words, has slowly become an XRP, the #1 rated XRP hater. So I'm going to read out to you regarding what Vanik's executive said and essentially what my response is to that. Vanik, essentially executive, said, "Dear XRP maxis, I will pretend your blockchain does something. Keep hustling. The crypto industry thrives on sharp commentary, intense tribal debates, and it really does, and moments that instantly ignite conversation. This week delivered another flashpoint when a senior executive from one of the largest asset managers stirred the XRP community with a pointed remark. Matthew, the head of digital asset research at Vanik, shared the statement that triggered the uproar. His position adds weight to every remark he makes, and this one is no exception. His post spread quickly across X and drew comments from analysts, traders, and dedicated XRP supporters. Many saw it as playful criticism, while others viewed it as such disrespectful towards a long-standing project. Matthew's words landed at a sensitive moment for XRP. The asset has been essentially seen renowned momentum from institutional flows, ETF activity, and broader market speculation. XRP supporters often feel misunderstood by the analysts who question the project's utility. And it's not just analysts sometimes that do this, or some CEOs, not CEOs, but some essentially in his essentially thing, the head of research at Vanik, or you do get moronic essentially crypto influencers as well. That tension made the community more reactive to Matthew's tone. His remarks, essentially, though humorous, was seen by many as dismissal of the years of development and adoption. XRP has often faced debates about its real-world utility. Critics argue that the blockchain has not delivered enough visibility and breakthroughs. Supporters counter with examples of payment corridors, liquidity solutions, and enterprise integrations. This clash reflects a deeper dive between community conviction and institutional skepticism. Matthew's post essentially reviewed that discussions by poking at the project's perceived shortcomings. Comments from top asset managers can shape sentiments. Vanik is a major player in digital asset products. When a researcher from such a firm shares a sarcastic remark, traders take note. Markets often react not because the comment changes fundamentals, but because it reveals institutional attitude. Some analysts argue that his tone suggests lingering hesitation among traditional firms towards XRP's long-term use case. So some are saying what Matthew has said is going to make people think inside the crypto space that maybe nobody's interested from the institutional side on XRP. The XRP community responded with its usual intensity. Supporters defended the project's track record and future potential. Many argue that institutional skepticism has exited for years, yet they never slowed the project's technical evolution. Others suggested that such comments highlight the lack of a deeper research into the protocol's capabilities. The reaction demonstrated how strongly the community protects its narrative. Matthew's remark may be humorous, but exposes a recurring theme. Crypto communities often take critique, essentially personalities, while analysts sometimes underestimate the cultural power of these communities. The truth usually lies between these extremes. Investors must separate emotional reactions from objective analysis, and they should examine adoption metrics, technological progress, and regulatory developments. And the episode essentially reveals more about crypto culture than about XRP's fundamentals. Communities remain passionate and sensitive. Analysts remain blunt and often proactive, is what they're trying to say. The debate will continue as always. What matters most is clear, verifiable progress, not the tone of a single post, which I agree. But Matthew is an absolute idiot. I just want to, say one thing to Matthew. This is my essentially rebuttal to the moron Matthew from Vanik as a head of research. I don't know why Vanik has hired this idiot, but here's my response to this idiot regarding this matter. Regarding nobody, essentially XRP has no use case, Ripple has no use case, nobody's going to be using XRP ledger. It's the exact same spewing of lies that Swift used as well. And it just shows that they're threatened about what this could bring to the table. But here's my response. That nobody wants to use XRP. Nobody wants to essentially use XRP Ledger. It has no use case. It has no fundamental, essentially, foundation. It has no utility, according to Matthew. So here's my response. Now, let me essentially respond with facts, not feelings. If XRP does nothing, if the XRP Ledger has no future, if Ripple has no world utility, the answer essentially is a simple question. Why do some of the biggest institutions in global finance show up to the Ripple Swell event 2025 in New York to speak on stage? Forget about everything else Ripple's brought to the table so far. The acquisitions they made, the billion-dollar deals they've made, the contracts, the partnerships, the announcements, the regulations, the licensings they have. Forget about all of that. Just pull it out to one side. Let's just talk about the 2025 Swell event. If it has no future, if it has no use case, if it has no fundamentals, if it has no utility, if nobody's going to be using the institutional sector, why was there essentially a massive attendee in terms of who attended this event in New York to speak on stage? Not to sit in the audience, but to speak regarding these institutional CEOs and executives that attended. Here are some of the names that were on the official Ripple Swell program who spoke, not sat at the audience. Brad, CEO of Ripple; Chris Larson, essentially executive chairman of Ripple; the chair and CEO of the NASDAQ; the director of digital assets at BlackRock; executive director of the White House Advisory on Digital Assets; leaders from G Treasury; leaders from HSBC Bank; senior figures from the European Parliament, global banks; payment providers, enterprise partners, regulators, developers building real-world use cases. You do not get BlackRock, you do not get NASDAQ, you do not get a White House advisory, you do not get a global banking partner showing up to an event for blockchain that does nothing. Because that's what Matthew is saying. Matthew is saying Ripple does nothing. XRP Ledger does nothing. XRP does nothing. There's no utility, there's no foundation. But they attended to do a speech. You don't get these types of people attending events for nothing. These institutions do not waste time. They go where there is purpose and potential. They go where innovation is happening. They go where real world utility is being shaped. So when someone from VanEck says XRP does nothing, I ask a very simple question. Then why was BlackRock on stage? Why was NASDAQ on stage? Why was the White House there? Why were there enterprise partners flying in from every continent to attend the Ripple Swell event? Because the answer is obvious. The world that actually builds essentially infrastructure does not agree with this statement. This is not speculation. This is not hopium. This is the fact that every major institution that attended Ripple Swell is already preparing for a world of tokenized finance, cross-border settlements, and real-world time payments. So if one analyst or one idiot or one moron from essentially VanEck wants to make a sarcastic post on X, the institution has already made their decision by showing up in person. XRP has utility, XRP has purpose, and Ripple is shaping the future of global finance. That's why they were all in New York. And facts are facts. So as much as people like Matthew want to come essentially on X, or Swift wants to come onto X, or even Fairside, that little weasel who won't list the XRP ETF, they can hate as much as they want, but the facts are facts. These huge behemoths, and I said putting everything else that Ripple brings to the table on the sidelines, but these huge behemoths came to a Ripple Swell event not to sit at the audience, but to do a speech on the finance of tomorrow. But, in Matthew's words, who uses XRP? XRP has no features, no fundamentals, no utility. That's Matthew's words. The reality of it is you can see who attends, you can see who does speeches, because you think you'll see BlackRock at an event with no future? Do you think BlackRock attends events like that? Do you think the NASDAQ wastes time to go attend essentially events like that? Do you think the White House is going to waste their time going to an event for no apparent reason? But then again, Matthew could be right. Matthew and people like Matthew are morons inside the crypto space. They are just weasels inside the crypto space that will try to do anything to stop Ripple's footsteps. We saw this with that little weasel Gary Gensler who got pushed out of his position. And then we saw Swift, because the only reason they're coming out going against Ripple is because they're threatened by Ripple's footsteps. And now you have another weasel, Matthew. And let's not forget the other morons. The crypto influencers that hate on XRP, but yet hold a bag of XRP. They come out and say, XRP has no future. It's never going to go above $1. Nobody uses XRP, but yet all of those XRP haters have a bag of XRP. Why? Just in case they're wrong. But they're so confident when they make speeches and tweets about XRP, hating on it on a daily basis, but yet they still hold a bag of XRP, just in case they're wrong. And on the other side, you have people who are essentially always comparing themselves to XRP. Chainlink comparing themselves to XRP. Litecoin comparing themselves to XRP. Bitcoin maxis comparing themselves to XRP. Ethereum maxis comparing themselves to XRP. Solana maxis comparing themselves to XRP. Everybody compares themselves to XRP because we are the best, and it will stay like that forever. Hate us, don't hate us, nobody cares. I'll be very honest. But you're wasting your own time when you come online and put out tweets like that as the head of research at essentially VanEck. It's embarrassing that you're a grown-ass man coming online, spewing lies like a child, while the facts state otherwise. And he's supposed to be an analyst for VanEck. How is that man the head of research? How is the head of research of a company like VanEck coming out saying, I don't see a future with this project? When we just had the Ripple Swell event, with the amount of licenses, guys, what amount of regulations that are in place, how can that man be the head of your company in terms of research? That company's doomed if that's your head of research. Honestly, VanEck is absolutely doomed if you have an idiot like that running the head of research, who can't read a simple PDF document, who's just allergic to factual information. Honestly, to all the XRP haters, you could be an influencer, you could be a head of research like VanEck, Matthew, you could be Swift, you could be Maxis from any crypto project. Stop comparing yourselves to XRP. We already know we're the best. And no matter what you say or what you do, the facts will always state another thing. And if you're an XRP holder, I mean, essentially, if you're an XRP hater and you're an influencer as well, why are you holding on to XRP? If you're an XRP hater and you're a crypto influencer, why are you still holding on to XRP? That's one question no XRP hater will ever be able to answer. That's the only question XRP haters will struggle to answer with a straight face on why they holding XRP. If they tweet about it 24/7, it has no future, but yet they hold the bag of XRP on something that has no future. Honestly, it's the number one question XRP haters cannot answer. Why are you still holding XRP if you hate on it so much? If you think it has no future, why hold it? Because it makes you look like a moron. Now, on the topic of Ripple, smashing absolute records, and XRP essentially, Ripple CEO essentially breaks silence after first spot XRP ETF hits $26 million in 30 minutes. Ripple has finally reached the moment it's been fighting for years. Its first spot XRP launched, did tremendously well, smashed absolute records. His brief article essentially carried the weight of the decade-long struggle, the regulatory crackdowns, the current delays, the court delays, and the industry essentially watching as XRP remained the only top-tier asset without an ETF product. Today, the era has ended. Transactions opened and XRPC exploded out the door. More than $26 million worth of shares had essentially changed hands in 30 minutes. That's not just a strong start. This makes XRPC poised to challenge this year's best ETF debut. Bitwise's Solana ETF currently holds essentially 2025 record 57 million on its first day. Bloomberg ETF analyst Eric essentially says that XRPC could easily surpass this limit if early demand continues at this pace. This kind of volume confirms what Ripple supporters have been arguing for years. There is deep unmet demand for regulated XRP exposure inside the United States. Bitwise's CIO Matt essentially said, and contributed as one of the clearest essentially explanations of XRPC's explosive start. This is what Matt had to say. The median opinion on essentially a crypto asset doesn't determine the success of an ETF. You rather have 20% of people like an asset than 80% of people essentially vaguely like it. ETFs die from essentially disagreements, but utility stays on. XRP has never suffered from a lack of interest. It boosts one of the most active global communities in crypto, sustained institutional interest, and years of pent-up demand due to regulatory essentially freeze that previously prevented a US ETF from launching. As previously reported, ETF expert Nate said that spot XRP ETFs would deal a final blow to the aggressive anti-crypto stance on previous SEC leaders. The successful launch of an XRPC is a symbolic milestone, not just for XRP, but for any asset seeking regulatory clarity. Brad didn't need a long explanation. The numbers spoke for themselves. $26 million in 30 minutes. Over 149 million XRP, worth around $336 million, disappeared also from crypto exchanges, centralized exchanges. At the same time, the ETF went long. When the ETF essentially went live, at the exact same time, $336 million worth of XRP disappeared from crypto exchanges. In other words, people took their money, their XRP, off the exchanges after an XRP ETF launch. This marks one of the most significant single-day reductions in XRP reserves in recent months. Despite the large outflows, the XRP dropped essentially because it followed Bitcoin's footsteps, unfortunately, because we don't have a Clarity Act. And also, regarding price action in terms of ETFs, typically essentially 2 to 3 days it takes for everything to clear in terms of payments for XRP to be seeing some sort of price action on ETFs. Or any ETF in that matter. It could be Bitcoin, Ethereum, Solana, XRP, whatever ETF it may be, it will take a few days for the payments to process. Unfortunately, Nasdaq isn't really running on the blockchain just yet, so it's not within seconds, it's on 2 to 3 days. But that should tell you everything. One, in terms of XRP going live in 30 minutes, that amount of essentially volume is crazy. $26 million in 30 minutes. That's just crazy. And two, $336 million worth of XRP withdrawn from crypto exchanges straight after essentially the announcement of it went live on the Nasdaq within 24 hours. And three, once again, people like Matthew. Honestly, if I was Vanik, I would fire Matthew in a heartbeat, because I cannot have an emotional, moronic twat running the head of my research company who hates on money. Who hates on money? It makes no sense. XRP can bring a lot of money to Vanik. So why are they hating on money as a corporation? It's because they have a weasel little child running the head of research at Vanik. On that note of my response to the idiots, once again inside the crypto space, who hate on XRP's future, yet their projects have no future, we have come to the endings of tonight's live. This was the CMF live show. It stands for Crypto Mouse Family. My name is Mouse. You can tune this live Monday, Friday, 10 p.m. long time onwards. However, I might be going to Germany on Sunday. It's a work trip. It's relatable to essentially the CoinMove chauffeuring and self-chauffeuring essentially side of essentially CoinMove regarding crypto payments and essentially vehicles. I might be going essentially to Germany on Sunday and coming back on Wednesday or Thursday. I will definitely keep people updated on that matter. So I won't be able to do the live show if I'm in Germany on a business trip. When I get back, obviously we'll continue the live show, but I'm going to be leaving on Sunday. It's going to take, I'll be back in 2 to 3 days. So if I leave on Sunday, I'll come back in 2 to 3 days. And also, we have more XRP ETFs going live this month too. Don't forget that one. Once again, this is the CMF Live Show. Stands for Crypto Mouse Family. This was episode 405 of the CMF Live Show. Thank you so much to everybody that tunes in Monday to Friday, 10 p.m. London time onwards. And also, disclaimer of this live, as always, is not financial advice, not political, and whatever I say is only for entertainment purposes. Before we do go, obviously, let's go start the comment section first. This is what's happening there. Then we call it a night. We are the best. Let's go. Facts. Let's go. I have exit plan on all my cryptos. As of XLP exit plan is not to exit. Maybe what Miles has talked about is borrowing against my assets. Let's go. You can't talk intelligence to a fool. Facts. It's very clear that this moron has not done his research properly. I agree. A fool will open their mouth and say foolish things like foolish, look foolish, think foolish, act foolish, and not realize their foolishness. I agree. Well said. He is supposed to be the head of research. Good luck with Vanik. I agree 100%. All facts. They hate, but they also hold it too. Matthew and Gensler are probably best friends. I couldn't agree more. I agree, comrades. Let's go. First 30 minutes XRP ETF flow volume, $26 million. Full trading day, 5 to 6 hours, $238 million. Facts. Night Miles of CMF. Pablo, see you tomorrow sometimes. I see you when I get back from Germany, if I do go to Germany. Carry is quite small compared to the other ETFs we're also going to be having. Facts, absolutely. Thanks, Miles. Good night, all. Good night, Stormy. Have a safe and blessed trip. Let's go, Stormy. Thank you so much. Thank you a bunch, Miles. Have a safe trip. Enjoy your weekend and good night, all. Let's go, Lena. Have a great weekend as well. Good night. Where can we find information on ETFs going live? I'll send it to you. Thank you, Miles. Have a great weekend. See you soon. Let's go, Mike. See you soon, brother. Good night, Miles, and good luck with your project. See you next week. Take care. Let's go, Frankie, brother. See you next week, brother. We'll keep an eye out for your update. Great trip if you go, Miles. Let's go, Susie. Good night, Susie. Good night, Miles. Love your rant. See you when you return. Have a great weekend and trip. Let's go freedom forever. Thanks, brother. Good luck and journey, Miles. Thanks so much for coming with us. Great news, Miles, and good night, CMF. Let's go, Dazzle. Great live. Take care, Miles and CMF live. Like, share, leave a comment for your support. Let's go, Ray. Good night, brother. See you next week. Be safe, Miles. I need your monument to return safely. Let's go, Scott. Great live, Miles. As usual. Good luck with CoinMove trip. See you soon. Good night, all. Good night, Miles. See you tomorrow night. Let's go, Scott, as well. And Callie, see you next week as well. Honestly, thank you so much to everybody who liked and retweeted this live show. CMF members, if you haven't, smash the like button, smash the retweet buttons. Night, Smiles, and CMF. Have a great weekend and good luck next week. Let's go, Joe. See you, brother. A great show again. Good night, all. Mickey, let's go. See you next week as well. I'll see everybody next week. Everyone have a great weekend. And if anybody followed me or subscribed to me during this live, thank you so much and welcome to the CMF. If you essentially liked and retweeted and commented on this live as well on YouTube or on X, thank you so much. If you haven't, please do so. Thank you, Miles. Great show tonight. As always, have a good night. Let's go, Carlos. See you essentially next week as well. Have a great weekend, Miles. You are the greatest. Let's go, Scott, brother. You are the greatest too. CMF, have a great weekend. Love you all. See you next week for episode 406 of the CMF Live. See everybody next week, same time as usual. I'll keep everybody updated and posted on X and obviously inside the CMF Telegram group. See you next week. And also, if you haven't, follow the CoinMove page on X, CMF members. If you still haven't, follow the CoinMove page on X. I'll post it inside my own, essentially, profile as well on X. But follow the CoinMove page if you haven't. And I'll follow back as well. I will always follow back. See everybody next week.